This is Forex weekly report. Non-farm payroll report gave clear evidence the economy in the U.S. is very fragile. According to analysts at Citigroup, the government has failed to spark on the momentum on the private job sector and must find ways to cure this part of the economy, which is now in critical condition. Experts at Goldman Sachs, in a report issued after the job report, said that they expect the Fed to embark on a full-fledged second round of quantitative ease, a move that could help the U.S. dollar hold back further losses versus all majors. When we look at the Euro-US daily chart, we see the X50 reaching overbought conditions as the pair bounced back down from Friday's highs by closing above the 132.50 quarter, a sign that further move to the upside could take place early on this coming week. The GBP kept the pressure on all its counterpart after the National Institute of Economic Social Research revised up its growth estimate, where it indicated the economy grew 0.9%. However, the GBP-US pair closed on Friday with the daily chart showing clearly overbought conditions. A strategist at JP Morgan, in a note released Friday, said the pound has become overbought versus the US dollar, and they expect a very choppy trading ahead as the traders decide how far to take the corrective cycle. The Japanese yen failed to follow through versus the greenback after the weak economical data from the U.S. The Bank of Tokyo Mitsubishi had reported earlier in the week that if the pair reached the 84.50 price level, they expected the Bank of Japan to intervene in an effort to weaken the yen. However, we saw the U.S. JPY pair face difficulties breaking below the 85.00 quarter as it bounced back towards the high of the day, closing at 85.40. When we look at the daily chart of the U.S. JPY, we see the indicators in a strong bearish correlation as the X50 still has room to move further before reaching the oversold condition. However, in consideration for further moves to the downside, the pair has to break through the 85.00 quarter, which also represents the other half of a double bottom formation at the 84.80 price level. The Canadian dollar cast some doubt on the country's economic recovery after a weak reading in Canada's job sector. The pair closed the week just above the 102.50 quarter after a bounce back from a double top formation at the 103.02 price level. A break there will open the door for a 90-pip bullish move as we see a strong consolidation on a daily chart from a double bottom formation. Looking at weekly charts on some of the pair, the Euro CHF weekly chart continues its bullish consolidation after a week of retracement. The pair closed above the 137.50 quarter, an indication that the pair could make another attempt at breaking the level at the end of the hesitation zone. The Australian-New Zealand dollar weekly chart managed to cross the 50 line on the X50 indicator. However, it bounced back from a double top formation at the 125.90 price level. We can monitor the pair for further move to the upside as monthly, weekly, and the daily charts are all joined together in a bullish effort. Looking at tradable news schedule for the week ahead, it all starts on Tuesday as US makes its rate announcement at 2:15 p.m. On Wednesday, Australia delivers its job report at 9:30 p.m. Thursday, New Zealand shows its retail sales report at 6:45 p.m. And on Friday, U.S. releases its core CPI and core retail sales report both at 8:30 a.m. And of course, this is all New York time. This has been Forex weekly report brought to you by Dell Computers and Monitors as we look forward to another week of trading in the Forex.